Hi, this is Jason, mortgage broker and property investor, here to share some tips with you to help you elevate your property game. Today we're going to talk about what is the difference between a fully assessed pre-approval and a system pre-approval that the banks are issuing to customers. Did you know that not all pre-approvals are the same? What's the difference? The difference is how much due diligence and scrutiny is put under each of these pre-approvals. For example, with a fully assessed pre-approval, the bank is actually getting an actual loan assessor to review every single detail of your pre-approval application. And they're reviewing all your supporting documentation, such as your pay slips, your bank statements, your living expenses, your liabilities, your assets, and so forth. Whereas with a system approved pre-approval, the bank's not actually getting anyone to look at the application. What they're doing is just running a credit check and getting your credit score, and then assessing it using their algorithm on their systems based on the information that's been input into your pre-approval application. Now, what's the danger and the risk of a system approved pre-approval? It means if there's any discrepancies in the information that was entered for your loan application, whether that's through your mortgage broker or through the bank directly, no one is there to pick that up. Right? Now, there might be some misinterpretations with that particular bank's policy, or there may be some misunderstanding from your mortgage broker or your lender on your particular financial situation that might have been missed, which would have been critical to your pre-approval application. Now, do you always need a fully assessed pre-approval? The answer to that is not necessarily. And the reason why is that there are some customers where their situation is very straightforward, or they're in a very strong financial position, and we don't actually need to rely on any special exceptions or particular policies to obtain that pre-approval. So in that particular case, your mortgage broker will actually run the same process as what a loan assessor would do when analyzing how much you can borrow, reviewing your documents, reviewing your living expenses, checking your credit report, and everything else that goes along with submitting a pre-approval application. So therefore, the end result should be the same as what your mortgage broker has told you compared to what you eventually get from the bank. There are customers where the situation is quite complicated, and that often includes examples of when you're a self-employed client. For example, you've been earning more money this year than you've been earning money last year because your business has been growing and you're doing better. Or there could be situations where your particular financial scenario has a lot of different complexities, where, as an example, someone might be on leave, someone might be earning casual income, someone might be earning varying income such as bonuses, commissions, and so forth. Under those circumstances, it is usually best to get a fully assessed pre-approval, unless your mortgage broker can confidently say to you that they've assessed your situation and they don't see any issues with you obtaining finance. Another situation where it's useful to get a fully assessed pre-approval is where the properties that you're looking at buying are always going under auction. Now, why do you need a fully assessed pre-approval? Because the property you're buying is going under auction. It's because when you're purchasing a property through auction, if you're the successful purchaser of that property, you need to pay a non-refundable deposit of 10% of the purchase price. Now, you certainly don't want to have any hiccups or any issues relating to your loan after you've purchased the property at auction and you've paid a 10% deposit that you cannot get refunded if something goes wrong or you change your mind. Therefore, it's really important to have your application for pre-approval fully assessed so that all the boxes are ticked, and the only thing outstanding to do before you get your formal loan approval is a valuation by the bank on the purchased property. If you're buying a property and your situation is very straightforward, you don't have a lot of liabilities, your payments are all up to date, your income is mainly just your annual salary and it's a base salary, there's no variances and so forth that we're relying on to calculate how much you can borrow for your borrowing capacity, then it can be relied upon your mortgage broker's advice that you can purchase up to a certain price and borrow a certain amount of money without getting that confirmed through the bank via a pre-approval. In that situation, maybe for the peace of mind to run a credit check, you may still want the mortgage broker to submit your application to the bank for pre-approval, so that when you do successfully purchase a property, there's not much else to do other than the valuation. Otherwise, you have to start the paperwork from the day you actually purchase the property, and it can be a little bit stressful. Those situations usually relate more to when you're buying a property under what's called a private treaty, or commonly known as properties that are for sale. So that means when you buy a property that's for sale, you don't need to pay a 10% deposit that's not refundable like an auction. Instead, when you make an offer and it's accepted, all you need to do is pay what's called a holding deposit, and that's generally 0.25% of the purchase price. Now, once you've paid a holding deposit and you've signed the contract of sale, that property is under contract to you for the next 5 business days, or sometimes 10 business days, depending what your solicitor or conveyancer has negotiated for you in the terms of the contract. So during that 5 to 10 business day period of cooling off, that's when you can actually get your finance arranged, even if you don't have a pre-approval, or if you do have a pre-approval, you then need the bank to do a valuation on the purchased property. And for customers who have a pre-approval in place, that generally takes about 2 to 3 business days to have the valuation completed, return to the bank for them to issue you your formal loan approval. And that's also the time frame that you'll be doing your building and pest inspection if you're buying a house, or a strata report if you're buying an apartment or a strata titled property. Those are the 2 situations, and those are the differences between fully assessed pre-approval and a system decision pre-approval. So give the channel a follow if you're interested in learning more about home loans and property.